Very good morning, guys. 5 green days in a row. The Nifty standing above 24,000, the Sensex over 77,000, the whole market leaning one way. And then this morning, the first wobble in the confidence. GIFT Nifty is pointing to an open near 24,000, about 170 points lower, a gap down that drops us right back onto the floor we only just cleared. So the support was cleared, the resistance was broken, and now we are back to the support. It is Friday with no expiry, no settlement to pin the tape. So the open interest, the money has already parked in the options. The day is on its own, and the question it asks is simple. Does 24,000 hold as support, or does a 5-day breakout start handing itself back? This is the Tanmay. You are listening to episode 64. I am Tanmay Kurtagoti. Let's go. Let me start with the tape we are defending. Yesterday, the Sensex settled its weekly expiry at 77,409, up 254 points, and the Nifty closed at 24,168, up 82 points. Its fifth straight day green and its second close about 24,000. The day was carried by lenders and heavy cyclicals. SBI Bank up 1.6%, HDFC Bank up 1.5%, Bharat Electronics up 2%, NTPC, Indigo, Trent all strong. The bank index green. The one pocket bleeding was technology. Infosys down 2.7%, TCS, TechM and HCL all red. The IT index fell off nearly 1%. So hold that shape in your head. Financials, public sector names and defense pulling the market up. The IT pack the only real drag. Now look overseas, because here is the strange part, that gap down is not coming from a weak Wall Street. It is the opposite. Overnight, the US shook off the hawkish Federal Reserve and rallied. The S&P was up by 1.1% and Nasdaq up almost 2%. Asia this morning is firm too. South Korea is up 2.3%, Japan is green, only Hong Kong is soft. In commodities, Brent is near $79.5, sits at almost 3-month low. Gold hit hard down to $41.85 and the rupee is steady and strong at 94.30 paisa. So put it all together, a friendly global tape and a soft local open at the same time. That tells you this gap down is our own profit taking after 5 days of up move, not a global risk off, and that is exactly the kind of dip that tends to get bought as long as the floor holds in or the support holds in. Now the part that decides today's chain. With no expiry, no open interest in the map, on the downside, the put writers, the people who sell puts betting we should hold that strike, are stacked thickest at 24,000, almost 97 lakh contracts, and they added 16 lakh more yesterday itself. Fresh money defending the very level that capped the market for months and now has flipped that to support. But here is the detail that matters on a gap down morning. Just below 24,000, the support goes thin. The 23,950 is light shelf and air pocket, and the next real put support are not until 23,900 or 23,800. On the upside, the heaviest call sits far out at 24,500. That is the hard resistance for the week, while the near seller is at 24,200, where the first resistance should come in, where they added 21 lakh fresh calls yesterday. So the map reads a strong support at 24,000, thin air beneath it. Real support stands at 23,900 to 800 levels. First seller resistance is at 24,200 and the cap is at 24,500. And the chain still leans gently bullish. The PCR still stands above 1, trading at 1.12. Now the piece most people skip, how the day moves, not just the big option dealers flip their behavior around the line we call the gamma flip level. That is present near 24,100 to 150. Above it, there is calmness on the tape. Below it, the moves are going to get amplified. Selling into weakness, so the moves feed on itself. We closed at 24,168, just above that flip level in the calm zone. but we are going to open near that 24,050 mark in the amplified zone, right near to the support zone or the floor. So the open is the test. If we hold 24,000, the dip buyers step in and we climb back towards 24,100 to 150 easily. If 24,000 gives way, respect it, because below it the move amplifies into the thin pocket and we directly crash towards that 950, not until that support of 23,900 is hit. Now the size of today's expected move. The ATM straddle is trading around 226 point. The market's own code for the day's range, which forms a band of roughly 23,900 on the bottom end to 24,400 on the upside. A wider one standard deviation envelope stretches around 23,885 to 24,450. The floor of the band sits on the support of 23,900, the roof or the cap of 24,500. So the math agrees with the positioning that is built, and a dip towards 24,000 or touch below does not mean that we are snapping back into a bear trend. And underneath sits the twist, the positioning. For 3 days, the FII desk bought in our cash market. Yesterday, they flipped out and sold 855 crore, their first net sell. In the index futures, they are still net short of around 221 lakh contracts. So barely they have trimmed anything. Yesterday, they trimmed just 3,000 contracts. But the DIs who bought yesterday again 3,130 crore and absorbed every single selling that is happening from the FIs. A 5-day breakout with the biggest foreign players selling cash and short futures into the domestic money, which is trying to buy it and absorb that pressure from the foreigners. So 24,000 keeps getting tested. 24,200 is the resistance. If that short squeezes, we snap back through. The retail crowd is net long, about 1.55 lakh future contracts. The proprietary desks are flat. Foreign short versus everyone else long right now, and the 24 line we open on. That is the story. So here is the plan for guys today, and today is buy on dips plan, not a chase. We open lower near 24,000, the floor that fresh money put is defending. So the first job is see whether it holds or not. Buy the dip into 24,000 and even a deeper wick towards 23,950 for a classic buying entry. So lean on the long as long as it snaps back, because that is the thin air that should put the dip buyers. But keep the stop honest. A sustained break below 900 and bounce is wrong. The next stop is 23,800, so don't wait for those 100 points. Book it out. Again 23,800 can be bought in. On the upside, take off towards that 24,150 mark, and then the first selling happens around that 24,200, and only a break and hold about 24,200 will make a sharp rally towards 24,500. So buy the dip while 23,900 holds, sell into 24,200 and respect that losing 24,000 can slip to 23,950 quickly. The run is 5-day old. Keep your size honest. One last word on quiet. India VIX is back near that $13 levels, but there is no expiry crush to catch in today, and we have a weekend coming in with a lot of news stacked in on the weekend. So keep your positions light. If 24,000 breaks or 24,200 breaks, that calm flips in minutes. Do not sell naked premium just because it is cheap. Let 24,000 prove itself in the opening 15 minutes to 30 minutes before you commit. So Friday in one breath, guys. 5 green days, and this morning we had a little pack. A gap down is happening around 24,000 on a friendly global tape. Our own profit booking is happening, not a global scare off. The floor is around 24,000, that is the support. A thin pocket sits at 23,950. The real support stands at 23,900 to 800. The first seller cap is at 24,200 and then the final resistance at 24,500. Buy the dip while 23,900 holds, sell into 24,200, and we know that losing 24,000 can slide to 23,950 fast. Keep that in mind. Cheap oil, a firm rupee, and a strong Wall Street are the cushion. The FI selling and a 5-day old run is the risk. Call it the gap down onto the floor. Buy the dip trade. One last thing, guys. Yesterday's episode, the expiry went extremely clean. 4.5 out of 5. Clean read. Full scorecard is available on rupeecase.com. Trade the level, not the opinion, guys. This is the Tanmay. If this helped you read the tape more clearly, share it with one person who reads it right now. Hit subscribe so you never miss a morning podcast. Stream the full episode free and first on rupeecase.com and also on Apple Podcasts, Spotify and Amazon Music every trading morning at 8:30, and leave me a rating, guys. I read every single one of them. I am waiting for your reviews and feedbacks. Have a great trading day, guys, and a happy weekend. See you once again on Monday morning.